Are you thinking about converting your business into a different structure, such as an S corporation? If so, you've come to the right place, because in today's video, I'm going to be talking all about the advantages of converting to an S Corp, and I'll also be teaching you the best strategies to implement in 2023 if you're an S corporation owner. This video is sponsored by TAILOR Brands. Stay tuned to hear more about them later. As always, don't forget to stay all the way until the end of this video, because I'll be giving away one piece of golden information about this topic that you're not going to want to miss. Without further ado, let's dive in. All right, guys, we got to break the ice. What is an S corporation? Before we get into the conversion strategies, we first have to go over exactly what an S corporation is. An S corporation is a type of corporation in which the taxable income, the credits, the deductions, and losses are passed directly through the business onto the shareholders. Because the income, credits, deductions, and losses pass through the business onto the shareholders, it means that the S corporations are pass-through entities. Now, as pass-through entities, S corporations are different from their main alternative, C corporations. With C corps, the owners of the business have to undergo double taxation if they decide to pull a salary from the company. This is because they are taxed at both the corporate level and they are taxed at the personal level. So, due to the lack of double taxation, S-Corps are viewed as a desirable business structure for business owners who want to get the most benefits out of their corporate structure without having to experience this high double taxation. Now, what are the requirements to actually be an S-Corporation? Because not all business owners are eligible to become S-Corps. In fact, there are a number of requirements that a business must meet in order to even qualify as an S-Corporation. Here is a small list of all the requirements a business must meet if it wishes to become an S-Corporation. Number one, it must be a domestic corporation. Can't be a non-domestic corporation. And number two, it must have no more than 100 shareholders. Number three, it must only have one class of stock. Number four, it must only have individuals, certain trusts, or estates as shareholders. And number five, it must not have any partnerships, corporations, or non-resident aliens as shareholders. It cannot be an ineligible company such as certain financial institutions, insurance companies, or domestic international sales companies. So if your business meets all of those requirements, then it can become an S corporation. But if not, you're not out of luck completely. This just might mean that there's a better or different business structure that would be advantageous for you. It is super important to remember that how you structure your business has a huge impact on your tax liability. Most of you guys come to this channel to better understand and learn how to structure your businesses. If you're here watching this video, chances are you're a business owner like myself or simply considering starting a business, which is why I'd like to introduce all of you guys to TAILOR Brands, which is an online platform designed to help you get your business up and running successfully as quickly as possible. TAILOR Brands is a one-stop shop for all aspiring small-based business owners with everything you need to be successful in getting your business started in one place. They provide branding tools, which includes logo creation. As you guys know, I'm a big fan of logos. They also provide website creation, digital business cards, and now they're making it even easier by offering LLC creation services. Creating an LLC through TAILOR Brands will save you stress and money while providing your business with an air of actual professionalism. Having an LLC will make your business more credible amongst your clients, and it will allow for you to separate your business assets from your personal assets. Remember, we don't want to do any commingling of expenses. Now, it gets even better. If your business qualifies with the requirements that I'm sharing with you on today's video, they are now offering S corporation creation services. So why not let TAILOR Brands do it all for you, hassle-free? Go check out TAILOR Brands by clicking on the link below. Thank you so much for sponsoring this video, TAILOR Brands. All right, guys, let's jump back in. Let's go over to the benefits of setting up an S corporation. As mentioned before on many of my videos, one of the primary benefits of an S corp is that shareholders are not taxed twice. They're just taxed once at the personal level. What this means is that people who own S-Corps instead of other structures like C-Corps can potentially save a lot more money in taxes. For this reason, it is very common for people to own small-based businesses that have a fewer than 100 owners to choose to go with the S-Corporation structure first. Now, another great benefit of S-Corps is that they provide liability limitation, just like LLCs or C-Corps do. Because S-Corps offer liability limitation, it means that the owners of the S-Corp will not have to risk losing personal assets or any homes, vehicles, or personal bank accounts in the event that the business is sued or if debts of the business are called in. Liability limitation is a major advantage to being an S corporation. But another big advantage to being an S corporation owner is that business owners can categorize themselves as employees. This means that they can take a portion of their income as salaries and a portion of their income as business distributions. If an S corporation owner chooses to do this, then he or she can potentially save a large amount of money on self-employment taxes that LLC and sole proprietor business owners pay. The reason this is because he or she would only have to pay Social Security and Medicare taxes on the salary amount that they paid themselves. Whereas an LLC owner, a sole proprietor owner, has to pay on the entire amount of business income that they own. So for example, let's just say an S corporation owner took a salary of $50,000, then made an additional $100K in income in the form of distributions from the business. In this case, the total earnings would be $150,000 for the year, but the person would only pay Social Security and Medicare taxes on the $50,000, the amount that was taken in the form of payroll. This would result in a large amount of tax savings if you're coming from a sole proprietor LLC over into an S corporation. The potential for massive self-employment tax savings is one of the many reasons why I'm speaking on YouTube so often. I want many business owners to be able to make that shift to where they can save money and get out of their sole proprietorships and LLCs and jump over to S-Corps. Now, at this point, you might be wondering, Karlton, is it possible for one to just own an S corporation? The answer is yes. You can definitely have an S corporation that just has one owner and it's just you. So if you currently have a sole proprietorship business and you want to switch over to an S corp, then you can 100% do this without having to go find a partner or jump through any major hoops. You can just say, I'm in a corporation now and switch over to an S corp. Now, back to the benefits. Another key benefit of the S corp is that you can use the cash method of accounting. C corps, on the other hand, have to use the accrual method. With the cash method of accounting, transactions are recorded when transactions are received or paid. With the accrual accounting method, revenue and expenses are recognized when they are generated as opposed to when the cash actually changes hands. Now, many people find the cash method of accounting to be more convenient, so this is sometimes more advantageous when you're thinking about choosing what entity structure you should be going into. Now, one final consideration that I have for S corporations is that they can help to improve your business's reputation. This is because many people believe that corporations are larger, more sustainable, more impressive than LLCs. Sole proprietors, on the other hand, not so much. In other words, transitioning to an S corporation from a non-corporate business structure can potentially help your company take a step forward from a reputation perspective. Now, this can be a good thing for your business depending on what type of business that you're in. So essentially, there are many advantages of just having a corporate business as opposed to just a sole proprietorship or LLC. Now, let's jump into the conversion strategy. Now that we've gone over the benefits of the S Corp, who they're for and why you may need one, let's talk about a conversion strategy that you can use in 2023 to transition your business to an S Corp successfully with the least amount of stress possible. The very first thing that you need to know about converting a business such as an LLC or a sole proprietor to an S Corp is that you have to do it by March 15th if you want to be taxed as an S corporation for that year. In some cases, you might be able to make the switch later, aka a late S corporation election relief, but there will have to be a valid reason why you did not make the original deadline. Without a valid reason, and I will give you one during this video today, without a valid reason, the IRS will most likely not approve the late switch and you will be stuck waiting for a whole nother year before you can make the switch, which means you're gonna have to pay more taxes. Now that you know the deadline, here are the steps to converting your LLC into an S corporation in 2023. We have to cover step number one, which is making sure your business is even eligible to be an S corporation. We talked about this earlier. The very first step to converting your LLC to an S corp is to make sure your LLC is eligible to be converted in the first place. Not all LLCs will be able to convert to S corps. For example, if your LLC has over 100 shareholders, it's not based in the United States, or has more than one class of stock, you won't be able to transition that LLC to an S corp. But if your LLC does have a less than 100 shareholders, is based in the US, and only has one class of stock, then we're eligible to switch your LLC over to an S corp. So as long as your business is eligible, you can move on to step number two, which is filling out your form 2553 form. Step number two to switching your LLC to an S corp, doing the conversion strategy, is to file form 2553. If you want to change your business structure from an LLC to an S corp, this has to be filled out. It's an election by a small business corporation. This is the document that will let the IRS know that you are changing your business structure to an S corp. Make sure that you fill out all of the details of this form very carefully, because if you mess this up, this can end up causing you to remain as an LLC. So you don't want that to happen. 2553 form needs to be completed correctly. Now, step number three is to have all shareholders sign the 2553 form, which means that if you have another business owner who's technically a shareholder, even if it's a spouse, you need to make sure everyone signs this. After you fill out all the details of the form, it has to be signed by all of the shareholders. So just make sure that it's not just yourself that's signing it if you happen to have other shareholders. And step number 4, file Form 2553 by the deadline. After Form 2553 is filled out and signed by all of the shareholders, make sure that you file the form with the IRS by March 15th. Once you've done this, the IRS will accept the changes. Then you should be all set. You'll be on their list of S corporation owners. Your business structure should now be an S Corp. Let's talk about this whole approval from the IRS. If the IRS approves your S election, then it's going to send you what is called a CP 261 notice. A CP 261 notice just lets you know that the IRS has approved your business's conversion to an S Corp and that the IRS accepts that you will now be taxed as an S corporation. A CP 261 notice looks a lot like this. After you receive it, you should keep this document in your permanent records. You might need it in the event of a lawsuit or an audit, so definitely do not throw away this document. Next thing I want to talk about is the late S election. If for some reason you're unable to file Form 2553 with all of the relevant signatures by the deadline, this doesn't mean that all hope is lost.
I need a few more days.
You can file what is called a late S election, and there is a chance that it could be approved. To file a late S election, you are still going to have to file Form 2553, but at the top of the form, you're going to write filed pursuant to Rev Proc 2013-30. When you write these words at the top of the form, it lets the IRS know that you still want to switch your business to an S Corp, even though you missed the deadline. But even if you file the late S election correctly, you will still be unlikely to get it approved unless there is a good reason why you did not file it on time. The IRS thinks that you're just filing a late S election out of laziness or disorganization. It might reject your late S election, causing you to have to wait another year. You should be aware that many people who file late S elections file late simply because they were unaware of the deadline in the first place. And it is common for the IRS to accept this excuse. So if the main reason why you missed the deadline was the fact that you didn't know about the deadline in the first place, you could be in luck when it comes to this strategy. And I'm sharing this right now because a lot of you guys are going on extension for your tax returns last year. You have the ability to still do a late X election. Now, how do I know when the right time to switch to an S Corp is? That's the next question we have to tackle. I get asked this question all the time by business owners. This is because they're thinking about making the switch from an LLC to an S Corp, but they're not sure when they should be doing it. The answer is that there is no exact right answer, and you can make the switch whenever you feel comfortable. However, with that being said, there is a point at which it makes more sense from a tax savings perspective to switch over from an LLC to an S Corp. And this is when your business starts to generate around $45,000 to $50,000 in net income. The reason why I have a couple of thresholds around this is because after your business hits this point, it starts to make more sense to have an S corporation from a financial and tax perspective than an LLC. If your business is currently generating over 40K, over 45K in net profit, then you could save money by just switching over to an S corporation and avoiding paying a majority of self-employment tax. The more money that you are making from your LLC, then the more that you will save by switching to an S Corp. For example, your savings will be significantly higher if your business is giving you $100,000 in income versus it bringing in $50,000, right? So how much can you save by switching? To understand how much money you can save in taxes by switching to an S Corp, let's imagine that you are making $100,000 per year with your LLC and are currently paying self-employment taxes. Self-employment tax is 15.3%. So on $100,000, you would be paying $15,300 in self-employment taxes. Ouch. Now, let's say that you decide to make an S election and you converted your LLC to an S Corp. Now, let's say that after you did this, you took 40% of your income or $40,000 as a salary and you took the rest as an owner's draw or distribution. In this case, you would only pay 15.3% on the 40K. So in this case, you would be paying about $6,120. That's a far less amount than what you were paying, which was $15,300. That's $9,180 in a difference in taxes. So as you can see, the tax savings can be quite substantial the more and more money you make. Now, keep this in mind. If you have a portion of your income as salary to reduce your self-employment taxes, this doesn't mean that the rest of your income won't be taxed. I want to make sure you understand that. You will still have to pay ordinary income taxes on the amount that's left in your business as profit. You could take that money out as distributions as you want to, but come March 15th, now that you're an S Corp, you'll pay taxes on that amount. You won't have to pay self-employment taxes on that amount, but you will still have to pay your normal federal taxes and your normal state taxes if you are in a state that taxes. Let me talk a little bit about filing taxes now that you're going to switch over to an S Corp. Because if you do end up converting, you should be aware that the tax filing will be a little bit different. For example, instead of reporting the income that you normally report as an LLC owner on your Schedule C inside of your individual tax returns, you're going to have a completely separate filing requirement. you're going to have what's called an 1120S United States income tax return. So keep this in mind. Once you have the S corporation, the tax forms you're going to be required to fill out will change. If you need help filling out tax forms as an S corporation owner, you can always get the help of a tax professional. Here's some other things you should know about the S corporation. In addition to the tax filing being different, there are a couple of other major differences between LLC and S corporation owners that you should be aware of. For example, S-Corps are required to form and adopt bylaws. They're required to issue shares of stock. They're even required to hold annual shareholder meetings and keep record of these annual corporate meetings. So when it comes to bookkeeping and payroll, it's a little bit different for S corporation owners too. An S corporation owner is required to have a profit and a loss statement and a balance sheet. At least that will help you when it comes to filing and reporting correctly. There's a variety of reporting deductions and remittance requirements. This means, for example, filing forms W-4 and Form I-9 for new hires, filing forms W-2s annually for your employees and for yourself. So make sure you stay on all of these new changes as you get ready to go into the lifestyle of an S-Corp. Now, you're probably asking, are there any reasons why I should just stay as an LLC and not switch to an S-Corp? For many people, the answer to this question is going to be no. And an S corporation is the next logical step once you're making the appropriate money. Now, a lot of people just start off with LLCs when they're first forming their businesses because they're a lot less intimidating than setting up like a formal corporation. Then once the business grows and reaches a certain point, typically they'll switch over to S corporations. Now, in a small amount of cases, it might be better for the person to just stick as an LLC or an LLP. For example, you already have a large amount of shareholders, or if you're planning on adding a large amount of shareholders in the future, or if you're investing in real estate, which is completely passive, which means there's no self-employment tax, then we would probably want to stick with an LLC. This is because if you have more than 100 shareholders, you won't even be allowed to get approved as an S corporation owner. You could still get approved if you had 80 or 90, but if you already know that you want to add more shareholders, then it wouldn't make sense to switch to an S-Corp because you can only have a maximum of 100 shareholders inside of an S corporation. Now, also, if you're planning on adding non-resident aliens as shareholders, or if you already have shareholders that are non-resident aliens, the S corporation is out. So this is why you just want to make sure you understand this. Basically, for the majority of people, it will make sense to convert their business from an LLC to an S-Corp, but in a few particular cases, it won't make sense to do this. Here's my golden piece of information as a part of this video. In the beginning of the video, I promised to give away one golden piece of information about converting your business to an S-Corp. Here it is. If you decide to shift your business from an LLC to an S corporation, then you need to make sure you do not make your salary too low. This is a common mistake with new S corporation owners. For example, if you're making $500,000 in the year, it would not make sense to set your salary as $20,000. If you do set your salary too low, the IRS may step in and they'll hit you with an IRS audit, and it's going to be called a reasonable compensation audit. If they find that your salary is too low and they don't consider it to be reasonable for your industry, then they could force you to raise it and pay more self-employment taxes, as well as any fines or penalties on the difference in how much you should have paid yourself. So far better to just set up salaries for a reasonable amount the right way from a right professional that's guiding you. And as a general rule of thumb, in our office, we know that typically the reasonable compensation audits happen for people who are paying themselves less than 30%. I'd recommend as a rule of thumb to at least make sure you're paying yourself 30% of your business's net income. This should help protect you in the event of getting into a reasonable compensation audit. Now, also remember, even if you switch your LLC to an S-Corp and you're taking a salary, that doesn't mean that you don't have to report the rest of your income accurately. So don't make the mistake of thinking that the IRS won't notice if you make 100 worth of income, but only report $30,000. You still have to report 100% of your income. You're still required to report all of your income to the correct officials and authorities. Now, taxes still have to be paid on the owner's draw. I want to make sure I recap that. The difference is just that you won't have to pay self-employment taxes on the amount that you paid yourself after payroll. So if you've already written yourself a payroll check, you're paying self-employment tax on that amount. Any distributions you take, you won't pay self-employment tax on that. This is true whether your owner's draw is $1,000 or $100,000. So hopefully your business will grow every year and your owner's draw will get larger and larger. Just don't forget to pay yourself a reasonable amount. All right, guys, we've reached the end of this video. I just want to take the time to say thank you so much to TAILOR Brands for sponsoring this video. If you guys are thinking about setting up an LLC or a corporation, there's no better company to set it up with than TAILOR Brands. I use them and I trust this company. I want to make sure that you guys have the ability to get your entities structured and set up correctly. I just wanted to say thank you guys so much for this video. I look forward to seeing you guys on the next one. Without further ado, over and out.